there's plenty of tailwinds for the precious metal at the moment, and the last sort of piece of the puzzle was clearly, the pivot in the Fed outlook for interest rates. I think the market has probably jumped the gun in a little bit early, considering that the rate cuts we think aren't likely to occur until mid to late 2024. But in a sense, it does mark, I think, a fairly important juncture for the market. I mean, up to this point, we've seen bouts of high yields and stronger US dollar. I think with that sort of outlook now, the implications of that tighter monetary policy coming into play, the potential for rate cuts through 2024 does signal a fairly sudden sort of shift, I think, in the monetary outlook, which has been the only real sort of headwind for gold over the past few months. I mean, we've seen strong safe haven buying. We've seen real strong physical demand, or at least a rebound from the weakness in 2022. It's just been this outlook for interest rates has really held it back. So I do think there's significant upside, and I think once we see the retail market in particular really start to buy in, and that'll come in the form of I think strong inflows into ETFs, and I think we could see gold well above 2,100 US an ounce.
All right, most people use gold as an inflation hedge and also as a safety play, Daniel, in times uncertain like these. But we had a guest like Scott Nations yesterday who said that he vehemently hates gold and that its use case is limited to only jewelry. How would you counter that sort of thought process, even if that exists in minority in the market?
Look, it's got its place within the broader sort of asset allocation sort of strategies. It's been proven to have slightly different return sort of aspects compared to a lot of the other asset classes. So I think any investment manager would be prudent to have part of that asset class in their portfolio. And at the moment, I think it's one which is going to obviously return some really positive gains, I think, over the next 6 to 12 months. So yes, it's got that elusive factor, which is really hard to put a finger on, but I think that actually ends up being an advantage. And certainly, when asset classes, other asset classes are going, one particular way, gold tends to counteract that. So I still think it's a pretty important part within the investment community.
And how much allocation in gold should one have at this stage? Typically, it runs at 5%. Could we do more?
Yeah, no, I think it probably should be slightly higher than that. Certainly, central banks are starting to buy into that sort of idea and have been increasing their allocation to the precious metal over the past year or two. I think anything sort of in the 6 to 7% range, would be quite prudent. And depending on what other asset classes you have in that portfolio, it could even be slightly higher.